Good day, ladies and gentlemen. Today I want to teach you an ultimate scalping strategy that you can use to make money in the forex market. Okay, so this strategy is a strategy for people that are very smart. You need to be very smart with this strategy. Okay, so what I mean by that is you need to be able to decipher where the zones are. Okay, if you are unable to decipher where the zones are and you are unsuccessful in terms of finding the zone where the actual zone is, you won't be able to use this strategy. All right, it's not like a mechanical strategy where you have to you know exactly where this point of interest is going to be. No, that's not the way it is. This one is such that you have to use the previous day zone. So what do I mean by this? There is always an unmitigated zone every single day. It now depends on whether you can find it or not. Okay, so you know about supply and demand zones, right? These are zones where price is expected to react from. So when these zones are forming, before the end of the day, the zone is going to be tapped into, and price is going to move in the way it's supposed to move when it taps into the zone. But as it is doing so, new zones are also being created within that same day. Every day there is always a zone that will be created that will not be tapped into. So you being able to find where this zone is your own task, which is going to make you profitable and be able to make money with this system. So it's an ultimate scalping strategy whereby you take your time to go through the candles that price has printed for the day in preparation for the next day. So the zones that you notice that we are not tapped into, those are your opportunities that you will use to make money. I have like 2 examples for you so you get to understand what I'm talking about. Okay, so without further ado, let's get right into it. So what do we have here? Look at this zone. This is a beautiful demand zone. Okay, so let me use horizontal lines to mark out the boundary of the zone. Okay, so this zone formed at let's see, it formed at 1930. okay, so it formed late in the evening. Probably that's why it was not mitigated. If it was formed earlier, price could move and get to it, mitigate it, and move the way it's supposed to move when it taps into the zone. You understand? So let's see what happened. When you see a vertical line, know that the day has ended. So you can see this vertical line right here. It means the day has ended and we are moving into a new day. We are crossing into a new day. Okay, now crossing into the new day, you can see what happened. Price has tapped into it right here. So understanding that this zone has not been mitigated from the previous day will help you prepare a pending order, or you could wait to take the trade manually. But it's better to have a pending order because you don't know when price will get there. So long you are certain in the previous day that zone was not mitigated, you are good to actually apply the system. And you can see price moved in the upwards direction. Okay, price still played into the zone again. Okay, played into the zone again, then pushed in the upwards direction again. Okay, still doing the same thing, show you that zone is a very strong zone. Price is moving into it, giving you buy trades, moving into it, giving you buy trades. So if you have even missed one, you probably catch the other. Okay, so price just keeps moving into it and giving you buy trades. Then it did this, filling up the zone completely. I once talked about turtle soup and the fact that gaps are potential turtle soup positions. I use the fair value gap to explain. Now this is a supply zone, a demand zone that is being turtle souped. At the bottom of any gap, be it a supply zone, a demand zone, a fair value gap, so long it's a gap having a boundary, you have a boundary, upper boundary and lower boundary, and then there's a gap in between. The extreme end of the gap is a potential turtle soup position. Why is that so? Look at this. I'll give you an example. Those that enter trade here, okay, those that enter their trades here in order to buy, their stop loss will be resting below that level. So price will want to go below the level in order to tap those stop losses. You understand? Some people will place their stop loss at the other extreme of the fair value gap or the zone, be it supply or demand. All right, so that bottom is always a point of interest for price movement. Price, you always want to get to that extreme end in order to fill it up completely. Okay, so you can see when price got to the extreme end, it gave us the best trade, moving violently in the upward direction. And as it was doing so, it printed a new demand zone. Okay, so I'm going to adjust to the new demand zone. All right, so this is the new demand zone that was actually printed. Now we just need to see if price tapped into it before the end of the day. Price did not. It came close to doing so around here, but it did not tap into it, so our zone is still fresh into the next day. Good. So into Sunday, into Monday, it tapped into it on Monday. On Sunday it did not, so it tapped into it on Monday and gave us an opportunity to buy, though it moved sideways for some time, then it's pushed up. Okay, it's moved sideways for some time, then it pushed in the upward direction to actually make you money. Okay, so basically, if you're a new viewer, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.